today. Remember, the finance minister announced there will be a moratorium of 3 months on EMIs of all loans. But here's the devil in the detail. Banks today asked customers to choose whether they wanted to hold their loans, their EMIs for 3 months. If they did so, they would have to pay more after 3 months. Sakshi explains the fine print. So Sakshi, this seems very different from what was actually announced.
Absolutely, the devil does indeed lie in details. NDTV has been interacting with financial experts throughout the trading day, and what we've learned is this, to understand the story in two parts. The first one, that financial experts are saying that the RBI 3-month moratorium must be looked at only as a deferral and aimed at helping only those who are facing a cash crunch. Now remember, these details were not clarified earlier to the viewer. Experts also urge customers and those who are facing a cash crunch, only those to opt for the 3-month moratorium. Now remember, what is the devil in the detail, Sonia, is the fact that they have said that the interest will be accumulated on the principal loan amount, which for customers comes as a huge setback, because remember, when this was first announced, people were hoping that in the midst of the COVID-19 outbreak, this will be a relief. Now, the second thing that is huge and that we've learned only recently is the fact that there will be a separate interest payment on the deferred amount as well. So in a sense, experts telling us that the deferred amount will be treated as a loan. So clearly a huge setback and a double whammy for customers.
That's an important point, because while you can understand that, of course, banks need to preserve their own balance sheet, so they can't just write off 3 months, but to charge interest on deferred payments is something which the consumer definitely should not be paying more for. So let's just focus on that over the next few days. But that's really the devil in the detail there on whether you decide to defer your EMIs or not.